good afternoon, everybody, and welcome to this edition of Ask the Experts for Tuesday, 11 October. My name is Kyle Copeland. I'm the market analyst over here at ThinkMarkets Australia, and it is a pleasure to be with you as we delve into the depths of your portfolio, give it a bit of a shake, see what falls out the bottom, and maybe what pops out the top as well. Find the Q&A window, get your requests rolling. I'll give you my best technical and fundamental reader. Let's head over to the charts now with the first request in, which is New Hope Corporation from Craig. Look, before that, I tend to have the Nasdaq Composite on chart. So I'll do just a quick top-down overview of markets. That is a very interesting chart. I do note last night, you can see here if I zoom in, we tickled the key demand level here, 10,565, and it goes down to 10,519 from memory, somewhere down there. We didn't close beneath it, I think. Well, we actually did close below 10,565, didn't we? But didn't close below that 10,519. That I do believe is the key level. Beneath that, it's lights out. I did also show you the S&P 500. If you haven't caught it on the tweets, actually what I might do is just head to that, and it's probably quicker just to show you the tweet of it, and go here. You can see all my links there. That's me on the Twitter. No news to anybody, of course, but the charts I want to show you are here. So we'll look at that in a second, but I did these charts of the S&P 500. So this is back in the .com crash, if I'm not mistaken. There's no scale down the bottom, but it certainly looks like it. So yes, 2000. The 2000 high was 1st of September, and looking at technical analysis, not just in terms of price action, but in terms of time as well. Time is another key input into technical analysis, especially if you're like a Gann or an Elliott wave trader. I don't use it as much. This is the extent I use time, is just looking at cycles. So often you see certain longer term patterns. Yeah, definitely longer term is my use of time, not short term. But in the long term, you often see patterns, large topping and large bottoming patterns play out in over a similar time frame, and that's what I'm getting at here. So if you look at how many days since this major high, and I know the all-time high was here, but this is kind of where it really started to unravel. You can see there's 200 days here, and we're currently 192 days from our current high, and that's the relevance there. So if you look at the blue line, and the market fell another 36% from that. That was in 2001. And then we head to 2007, and I'll just flick back and forwards a little bit here, because I think it's pretty instructive just how similar those patterns are. You know my traffic light system. So green, orange, and then it goes pink. I don't do red because it gets hard to read some of the black writing there. So green, orange, pink. Green is go, it's good, we're in a bull market. Orange is, hey, heads up here. Start to make some adjustments about your portfolio. Probably stop adding a whole heap of new risk. Start to trim underperforming stocks, and maybe start to think about shorts. Pink is, hey, you're in a bear market. Don't worry about what the talking heads on TV say. You're in a technical bear market by my definition, and therefore you should be having very high cash levels, just a few longs, there's always stuff going up, top left, bottom right, and focus more on the shorts. Okay, so that was 2000 to 2001. I can tell you I didn't know 90%, that's bad grammar, of the stuff I know now. So I wasn't on top of this one. I was pretty good on this one. This was the GFC, because I learned my mistakes from the 2000.com crash. And again, look at the timing. The timings are very similar, and the patterns are very similar, traffic light system. And then we get to today. So there we go. So we go back and forward to today. You can see even that rally there, where we actually moved into a short-term uptrend. Look at this in the GFC, short-term uptrend, popped above the long-term downtrend, gave everybody this false hope, and then it wasn't long before we're back beneath it. And look at this move here today. And all this way up, I was totally skeptical of that move. It was juiced. It was on steroids because of Amazon and Apple's, and two stocks effectively caused that rally. And here we are back here. So that one was at 28% to go from the timing there. And this is where we are now. Let's head back to the charts, because that's going to give me the Nasdaq. And I don't need to say much. I think I've kind of explained my view on things. There's no guarantee that we're going to go down between 28 and 36%. That is just rubbish. It is just silly. It is just foolish to think that because something has happened in the past, it must therefore happen again. It's not. I'm giving you those charts as a guide in terms of price and time and the possibilities of what could happen. What has happened in the past, we can learn from the past and potentially not make those mistakes again into the future. So where does the ASX sit within the context of that discussion? Well, it looks like a pretty similar chart. So just because it's the ASX doesn't mean it's going to be different from, say the S&P 500 in the USA. So I remain cautious on the market as we go. Doesn't mean there aren't stocks out there that we can buy and buy with our ears pinned back. And that's a nice little segue into New Hope Corporation. And I'm sure the question that Craig and many other people are wondering about this is, where is it going to, where is this rally going to end? It's been great. I know many of you have been on it. We've obviously followed this up. It sold us a dummy here, no doubt. So obviously that's the signal day, and it was around here. It might have been a Tuesday or just after, where I said, hey, look, I don't like the look of this candle. 1/3, that left you with 2/3. And I think it was around here we certainly looked at Whitehaven. We said, look, you might want to get some back in. There's nothing so sinister here that would suggest to me we need to do anything just yet. But hey, don't forget this last candle here, and I'm going to say this over and over again, that is a live candle. So you have to understand that anything can happen on this candle, and you need to reassess it at the end of the session. Okay, we're about halfway through the trading session for the people who are listening to me on the recording. If this starts to mirror, say, this candle over here, so we're starting to look more like that, then that would be enough of a signal, I think, to lighten the load again, to trim this one. But this candle here, I'm not too fussed about it. And this is just the size of the candle, size of the supply candles compared to the strength of the demand candles. I don't think there's anything to fuss about here right now. So if you've trimmed, hang on. If you've got a full position, I still think hang on this one. I don't think there's anything too sinister going on. Let's look at the rest of the cohort, and I'll probably head off a bunch of questions that are coming down the list. Whitehaven coal is, yeah, look, I think I'm still in the same camp. I mean, these are not great candles, but I don't think they're so sinister that we need to do a whole lot about them. It's not great when you do have a demand candle like this. So this one here, I mean, this is a clear, this is, look, a clear demand side candle, right? No doubt about it. Ideally, I don't want to see a close beneath the low of that last demand candle. Okay, so that is through there. But it's a very short-term way of trading, to be fair. The overall trend is still up here. Short-term and long-term trends are still up. It's not great. It's not great if we close beneath the demand candle. Why? Think about the psychology behind this demand candle. The market was just so convinced at this point right here. That was so convinced that this thing is worth buying. Now, here I am. I said, hey, $10, let some go. I wasn't convinced that it would cruise through $10 like it did. I also told you -1/3 here, and I suggested a -1/3 here. So just being fully upfront about my suggestions in the past. So at most, you've probably got a third left if you have followed me. If you haven't, then you might be holding a bit more. Back to this candle. The market is so convinced here. It's so convinced that this thing has to go up. I don't think it's a great sign if we get beneath that point again. It's just like, where are you guys and girls? Like, you were so convinced. You were buying on that day with such confidence. Well, where are you today? Like, why aren't you there today? That last candle's a live candle. Maybe they are there. Maybe they just haven't stepped in. Maybe they're going to come in 10 minutes before the closer in the closing price auction and pop this back up. It's absolutely possible. But yeah, I'm not sure if I'm leaning to dusting the final third. So I'm sort of, the psychology for me as well, if we're 1/3 here, 1/3 here, let's give this last third a bit of wiggle room. But if you haven't dusted anything, maybe you might look at that, a close beneath that level, as saying, well, it's not 100%, all good from here. Certainly, if you wanted to use that sort of thinking, then that candle there, that's starting to, if it's close beneath that, it's really starting to look like a reversal now, isn't it? A short-term reversal that could bring it back to, not here, that's not what I'm talking about, okay, but possibly bring it back into this zone there. Now, if we fail there, the next leg down is to here and so on. But I don't know the future. I don't know where it's going to go. I think I've mapped out all the possibilities. I don't think I need to say I think it's a buy, hold, or sell. I think I've given you the possibilities depending on where you might be, what you might be doing. And let's go to Terracom, which I thought was chart of the day after this one here. I could not foresee this. But it happened, let's face it, after a 3.5% fall in US markets and a pretty nasty fall here. Is that enough to cause a partial exit? Gosh, you got me. You get, oh, geez. It's not great, is it? This is still good. I think you could use the same methodology. I think this is certainly a shot across the bow. Okay, so this is fingerprints, because when you make that new high, you really should go on with it. Right, you should go on with it. Let's call that the fingerprints of supply. And if we close beneath, all right, that's why I've highlighted that. I'm just going to get rid of that for a second. And let's say we close beneath the bottom of that demand candle, then I think you are getting here. I know I'm trying to hedge my bets a little bit, but let's not hedge bets. Let's say, look, if we close beneath that, it's not a great sign. Okay. And last one, Yancoal, which is actually quite boring compared to the other ones, isn't it? I'm a little bit concerned about in terms of building supply. You often hear me talk about this idea of building supply, but no, I don't think it's panic stations yet. If we see a black candle, because I'm not going to be here every day for you, but I'd say a black candle that closes, so a long black candle that closes, say beneath that, but certainly this, then I think we are in this sort of building supply environment, and then that would constitute more than just a partial exit, I would suggest. So here is a pressure point, here is a pressure point, and certainly beneath here, in my opinion, there's no reason really to stay in it. Okay, so just giving you a roadmap going forward for the entire coal sector. And just to wrap up this discussion on coal, so I can put it all in one place in the recording, that's coking coal, which continues to trend modestly higher. I'm a little bit baffled by this, I'll be honest, because if I look at the iron ore price out of Shanghai, it's actually been trending higher over the last week or two, and that's the Singapore-based price there. So that's interesting. Is it China stimulus? Well, I would counter with this chart here and say, well, I don't think so. This is the Shanghai Stock Exchange Composite, the SSEC, and this is the A shares as well. So this is the mainland shares for Chinese citizens, and that looks horrific. And in fact, if I go to the weekly chart, that looks even worse there. So there's something disconnecting here in my brain between that coking coal, iron ore stocks, our material stocks over here. I know I'm way off topic. I'm rambling, but this stuff is crazy strong to me. I look at BHP and I say, why? Why are you so strong? And I'm not saying this as in I think you should go down. Not at all. I'm just saying, look, you're very strong right now. It doesn't sit well with my view of the world, but I'm not going to fight you either. Okay. I mean, if anything, that probably looks like it's going up. Rio Tinto, look at that. I mean, gone for all money down here in terms of the trends, candles, price action, and then to put that in, that's very interesting. And rounding out the trio here, Fortescue, maybe not as good as the other two slightly more diversified. And to continue my rant here, but hopefully it's instructive for everyone, let's have a look at some of these commodity prices. So let us go maybe to this chart here and go line, because these are London Metals Exchange prices, and we only get an afternoon fix, so the chart's very sketchy. There's aluminium, copper, wouldn't say that looks fantastic. High-grade copper in the US, obviously very similar. And then we've got the Singapore-based iron ore, which we just looked at, Shanghai-based iron ore. Sorry, other way around. Let's have a look at nickel. Let's have a look at lead. Look at that rally. Wow. Let's have a look at tin. Well, that one's definitely in the doldrums after this, this huge rally into the invasion of Ukraine, and then zinc. So I think, look, on balance, those commodities are heading lower. We were talking about coal, but it expanded into this huge discussion about the Chinese economy, stock market, and commodity prices. There's your Newcastle coal futures. Okay, so I think when we're talking about coal as well, understand that that trend is looking like it's changing. It's still very strong. But certainly the short-term trend, in fact, looks like it's changing. No, the short-term trend is down now. That's very clear there. So that's interesting in itself. So that might temper some of your enthusiasm over those coal stocks. Natural gas, this big energy crunch, that story I think is cooling down, no pun intended. And there's the natural gas price. That could actually break down here. That could come down through here and maybe test this. That doesn't look great to me. And then we're going to go to crude oil, which has had this huge rally here. Still, look, I think the downtrend is still intact, but I think I'm going more neutral on that than bearish. And well, just because we're here, we've got uranium's very flat. Now, let us get back to, I think I've covered that. Let's go back to your requests, and we're going to go to this chart here and Audinate. We won't look at the fundamentals for the coal stocks because we have done those in recent Ask the Expert sessions. Audinate doesn't look great. We have done some scratchings on this in the past. I think we identified this turnaround quite early, said we wanted to manage our exits through here. I talked about the various points you would manage your exit, and maybe this is a little bit of insight to what could happen into Yancoal. We talked about Yancoal with that building supply pattern, very similar to that. Now, the last time I looked at this, it might have been the 2nd of October, perhaps. Any reason to buy it back today? And I think we might have agreed no. And then I can just pretty much update this now to today's date, which is the 11th of the 10th, and say, do we have any reason to buy it back? I don't think so. The short-term trend is down. That's this light pink zone here. The long-term trend was actually switched back to up. So with your long-term trends, you want to see a test. There's your first test, clear as day. You'll often see this first test. We don't always get through. Often it's the second or the third test that get through, but you want to see this dynamic trend zone here. Trend zone. Why is it dynamic? Because it's based upon my moving averages, so they're always moving. You want to see it go from a resistance, is when it's in a downtrend, to support. Okay, so that's what we want to see. White candles came in, up we went. Now we're seeing that it has gone from support. Very clear here, isn't it? Like clear as day. And look at that. I can't make this stuff up. I can't make this up. You wouldn't believe it if I told you that this stuff is actually that simple. Short-term trend zone dynamic, long-term trend zone dynamic, and X marks the spot for where the supply is coming back in. I can't see any reason why this would bounce from here. I can't see any reason why it won't continue to fall and probably come back and test this zone here. So if I had to go buy, hold, or sell on that one, I'm very clearly there for a sell on Audinate. If you're curious as to what the Audinate fundamentals are, I know it's a popular stock, so maybe let's have a very quick look here. Notice I changed the screen there. Nick, just butt in if people have any issues that I can only see the top of my question list. I can't see down to the bottom. Okay, Audinate. We are in Thomson Reuters Refinitiv Icon product here. They obviously provide the historical data, but then they get the consensus data going forward. So estimates from 5 brokers in this case, but it could be 15 if it's like something like BHP. And these brokers will provide a rating. So in this case, we've got 1 strong buy, 3 buys, no holds, 1 sell. Interesting, there's a sell in there. Brokers don't often go sell. So that every time I say that, oh, it's interesting, there's a sell in there. It actually means more than you think. The average price target from these brokers is 941, which allows 33.5% upside. I take that with a pinch of salt because they tend to ratchet their price targets up on the way up in bull markets, and then they don't ratchet them down in bear markets. So these numbers just get bigger and bigger. It's showing an error here. That's not a problem. It's because we don't have a growth rate because we are not making any money until we get to here. So if I change that to 24, everything starts to appear, but it's going to be out of whack because of the growth rate. We've only got literally 1 year's worth of growth, and the compound annual growth rate from 24 to 25 is 171%. So anything that has growth that astronomical is going to have a huge potential valuation, especially if we continue to value it with a prospective PE of 124, which is the median of these two numbers. So on a normal stock, the default setting is generally the best. I don't think you can do that on this particular one. I think the execution risk risk. I'm going to go at least moderate what I know about Audinate, and given these earnings are so far into the future, you could potentially go high if you wanted to, and we'll see what that does in a second. Nobody pays 124 times earnings as their target PE for stocks anymore. Certainly back when things were booming before interest rates went up and the Nasdaq was trading at about 70 times earnings, maybe. And let's go. I think we picked out here in Australia at 78. But typically, long-term historical broker rule of thumb is you don't pay more than 40 times earnings for a growth stock. It still makes this look very, very cheap here. So, again, it's hard to value something with profits so far out and therefore with such an astronomical growth rate. So I'm not even going to spend any more time on that, but just showing you the illustration of how the spreadsheet works more than anything else. Let us go back to the charts and to the next request from you. That was for Chris. Thanks for asking about that one, Chris. This one's from Arjit. Arjit is asking about CHN, which I'm going to go ditto for Audinate. We've got a short-term downtrend, long-term downtrend. We do have this little batch of higher peaks and higher troughs, but really I need to take it back to that short-term downtrend zone. Look, it's somewhat promising, but more broadly speaking, in terms of longer-term peaks and troughs, I think they're still heading down, and we're sort of just compressing into this range here around 337. It's a little bit like the bouncing ball pattern. So imagine you've got a table. Okay, here's our table. There's the tabletop and there's the table legs. And imagine that the table represents demand in the market. Okay, and we've always got supply. Supply is ubiquitous, but when you have the price doing something like this, which is what this one is doing, Chalice is doing, okay, what is it telling you about supply, right? So each time we try to rally, we rally a little bit less. Okay, the optimism, the hope, all of the people looking at the Chalice fundamentals, and no doubt, Ajit, you would tell me the fundamentals on Chalice are amazing. All of those people buying, eventually they get overwhelmed by an increase in supply. There's just either there's not enough demand on the bounce, or there's just too much supply. And it doesn't matter which. Neither of them is positive. And then there's even less demand, or even more supply, or both. And then there's even less demand, or even more supply, or both. And then there's even less demand, or even more supply. And you get to a point where you just fall off the edge of the table. They're just like everyone and anyone, damn it, anyone who believed in this, right, and wanted to be part of demand is in. Oops. Right? They're in. There's nobody left to get in. And we know what supply was doing, right? So supply side once out. Still, like nothing changed. Like, I mean, they didn't need to send you a written invitation. They told you exactly what they're doing. And in this, we call this demand vacuum. Demand vacuum, right? There's no demand, and then prices fall very quickly when you get off the table. Actually, I would put to you that Chalice is getting very close to the edge of its table. Let's have a look at CXO, which is the next request here. It's holding this, I think, pretty well. I think that's good. That's encouraging, and it's doing it with some decent candles. So I'm referring to this is good, but this last one's still live, okay? What I don't want to see this little shadow here? I don't want to see that grow. So I don't want to see today's candle turn into something that looks like this, and that's going to change in a second because you know what I'm about to do. Well, it could be red, hey, depending on what charting package you're using. So let's go red for a change today. There you go. We don't want to see it turn into this. Because if it turns into that, the supply here, which is substantial, and I'm going to say this candle here illustrates major motivated supply in the market for core. It tells me that supply is putting its fingerprints back on this one, and that supply continues to build within this short-term downtrend. So if that candle turns into this, then I think it's going to be the end for core. And I know that's a pretty big call, but I think that's the end. I think that's the end of CoreLithium. And you say, hey, Carl, how dare you? Do you have any idea what CoreLithium is doing right now? Well, I would suggest to you that if everybody knew how good CoreLithium was, it wouldn't look like this. It would look more like this one here, Okay, so one of those two lithium stocks is better than the other. I'll let you decide which one. I'm curious. Let's go here. Let's do CHN. Why not? Very quickly. And you're going to don't shout at me yet. There we go. I'm on top of it. I promised no more than 30 seconds on Chalice. Start counting, and we are losing money. We are losing money on Chalice. Look at that. We don't have a profit into the foreseeable future. So I'm baffled as to how it hasn't fallen off the table yet. And I have called this one a short in the past, haven't I? CXO. Let's have a look at the Thomson Reuters estimates for CXO. We've got 2 of them, but somehow 3 recommendations. That's interesting. Thomson Reuters, strong buy and a hold. We are going to have some earnings for this, though, coming in here. 1.3 cents a share, 20 cents, and then 26. So amazing, wonderful, incredible earnings about to occur. We should not be here. We should be here instead, correct? And again, hard for me to value it because anything that's going in to start having earnings, we're getting silly growth rates here. So you could put a long-term growth rate on that. That's another thing we could have done on the other one. So if you go custom growth rate and you say, look, in the very long term, let's say they go for something sensible like 15 or even 20% growth, and we turn this on, then you'll get a very different, very different valuation, won't you, on your thing. But I don't know what the long-term growth rate is there, so I can't comment. Anyway, just giving you an idea of what the spreadsheet can and can't do. It's harder when there are companies that aren't making money or companies that are only just going. So it's just a function of the questions you're asking me now, the stocks you're putting in front of me. I saw this one. The other day. I reckon I saw it here. I reckon this was the day I saw it, and I thought, oh, that looks interesting. It was the day I did the shortlist. It was the day, so it's Friday. I did a shortlist, or maybe that's today. That's Monday. It was here. That's Friday, and I thought, geez, do I put this on my shortlist because I really like the look of it? And then I said, no, there's no way I could possibly create a technical analysis shortlist of longs with Mesoblast on it. So I didn't put it on. But yeah, very good. So this is for Warren. If you're on it, Warren, I'd say stick with it, assuming today's candle stays full white, because it's a ripper. I think it's one of those classic turnaround patterns. Where are you going to run into some trouble? Should you buy it here today? I think you're kind of 2 candles late, because I think we're starting to get really close to here, are we? Let's have a look. It depends on how wide you want to draw that zone, but look at where let the candles guide you on how wide these zones need to be, because the supply is really all the way down to here, isn't it? When you think about it, I mean, yes, that's the top, but look at the candles. So I'm saying, look at this candle, look at this candle. Look at that, look what was there. So the supply zone, supply is never a finite point. It's never a point. The supply zone is probably that big, and this is another reason why I chose not to put it in the list. And I regret that now, but hindsight's a wonderful thing. What should you do if you've got it? Does Warren have it? Let me look down the bottom. Doesn't, maybe put in the chat there, Warren, if you've got it, and I'll be able to give you a more tailored suggestion. He does have it. I think you can hang on there, Warren, but watch out for what happens here. Okay, so Warren, you're an expert. I don't need to tell you what candles you need to look out for here. You know exactly what candles you need to look out for in that zone, because if they start to look like this, the red or the black variety, then you'll know what to do with them, or potentially, Warren, you might see something that looks like this. And I'm sure Mesoblast's checkered history. Warren, if you've been a long sufferer, don't trust this thing. Don't trust it at all. Look, I normally want to keep moving, but I'm so curious. Is this thing finally going to make some money? No, it's impossible that Mesoblast is going to make money. Let's have a quick look. Yeah, I just want to see what the brokers are saying, if anything at all. So potentially there, this elusive first profit keeps getting pushed further and further down the track, doesn't it, Warren? But for what it's worth, there are 4 broker estimates. One is at a strong buy. Yep, okay, keep the faith there. 3 buys, wow. 1 hold, and their price target is 347, Warren, which you should get another 228% if you believe the brokers from here. Okay, let's get moving. Let's go to APR. No, Yancoal was next. I'll have to scroll back to the top of my list. So we have done Mesoblast. Hello, King. After a look at the chart for Sheffield Resources, certainly SFX. Oh, that looks interesting. And anytime I see big white candles on big volume, you know, it gets my attention. A little bit concerned about this shadow here. That's not great. It's telling you that, yes, enthusiasm came back in after, let's face it, a protracted period of nothingness. If you would ask me any point during here whether you should buy it, you know, I probably would have said no. I would have given you my 3 scenarios. And I would have said, King, I would have said, oh, well, there is a scenario where it does go back up and, you know, probably 20%. And I would have said 60% that it goes sideways, and well, actually not. I probably would have said 20% goes sideways and 60% it goes down. Is probably the 3 scenarios I would have given you, right? You've seen me do this a million times. So it looks like we're in this scenario, aren't we? So it did catch a bunch of people off guard. If you're in it, watch for those supply zones. So there's one here and there's one here. Okay, and next words out of my mouth, we're going to be same as I said to Warren. Look, watch for the shadows in those zones. That just means people who have been waiting to get out, they're actually starting to get out. One candle does not a reversal make, and this is not the worst one it could be. So you're waiting for confirming signs that supply is too strong. There's just too much supply to get through this one and to even have a chance of testing that. So continue to watch for those black candles in there. King. And actually, King, I should have read the rest of your message. Don't own it yet, but considering getting in. Look, I think you're on the right track, but let us wait for this first, okay? So let us wait for supply to do its job, because don't forget, there's a bunch of people, like, they're just waiting. They're just waiting to die. And I don't mean that in a nasty way, but you know what it feels like. You know what it feels like when you get in here. Or have you never gotten in at the top? Is that what you're going to tell me? Are you that person that's never gotten in at the top? I don't believe you. If you're listening to me, you've gotten in here. In fact, you probably got in here, right? If I know you well enough, that's where you got in. And then like, please just go back up, please, please, please. And you get to a point where you're not even holding it for it to go back up. Like you get in here, like when you get in here, this is I want to make money, right? Like, give me money. Oh, didn't print it. Doesn't matter. Anyway, you get the idea, right? When you get here, I just want to break even, please, right? And then when you get here, it's like, well, I'm never getting out of this. Never. Sad face emoji, right? You're just waiting to die. So King, this is the concept you want to take away from this chart, is there's a bunch of people that finally got their wish. Either they broke even or they just said, you know what, enough's enough. Let us see how they respond now. You know, this is great. This is great for Sheffield Resources with the volume, supply removal, interest. Volume's like, you know, volume in the market is like the volume on your stereo. When it's very, very low, nobody knows about it, right? Nobody gives a damn about it. When you turn that volume, you crank it up, the people across the road can hear it, right? They might come over and they might want to party, okay? And that's what that's about. So let's see how supply responds. If it responds very mildly, okay, that's a good sign. There's not so many people waiting to die, right? Or we've cleaned through them already. In here, we've already got through them. So watch for the candles now, King. You know the candles I want to see. I want to see these ones. They're going to change in a second. You know what they're going to change to. And I wish I had wrong one. Better charting package. Let's just go here and go here and go here. Bang, and go here. You know what I'm trying to do here. And go here, and there we go. Okay. That's it, King. That's it, isn't it? And you know what these moving averages see. Oh, look at that long-term trend. Started to turn back up, short-term trend. And we find these in these zones, holy-dolly. And then we have to go to the final step, which is to measure your reward to risk, because here's your next supply zone that you have to worry about. And can you get a nice stop in? And I know we're getting a few steps ahead, but it is showing you some of the complexity that goes into making a good trade. Terry, How are you? Let's have a look at HAV, Havilah Resources. Oh, I'm going to put that in the ho-hum basket, isn't it, Terry? Give me a score out of 10. What have we seen today? New Hope Corporation. And I know it might go down tomorrow, or that might have been the top. I don't know. But let's say, look, it's 9.5 out of 10. And then we get to, say, Audinate. And this is for going long, and that's probably a 3 out of 10 or a 2 out of 10. And we might get to, say, Chalice, which is, again, like a 2 or a 1 out of 10. And I want you to put your request, which is Havilah, in that mix. And I don't think it's as bad as Audinate. I don't think it's as bad as Chalice, but it ain't that good. Maybe I'm going to give it 5 out of 10. And just decide whether you want to have a bunch of 5 out of 10s in your portfolio or a bunch of 10 out of 10s in your portfolio, because the choice is yours. You don't have to be the person who is this person here. You've got that choice. You've got that choice every day. Don't be that person. Don't be this person here. Havilah Resources, buy, hold, sell. You know what? I'm going to go with, I don't care. Do whatever you want, Terry. I'm not interested in that one. Let's have a look at this one. Karoon Gas. I am interested in this one. This looks half decent. A little bit better than half decent. Let's go 6.5 out of 10. Because the short-term trend, yes, there is some demand in the system there. It's lurking around. I'm frustrated by Karoon, and if you've owned Karoon for any period of time, you understand my frustration, because it has looked very, very good in the past and then just hasn't. Look, much of this move here, it should not surprise you, because when we looked at our commodities earlier on, you would have seen that the crude oil price, where is it in stocks? Where are you? Energy, there we go. The crude oil price, it sort of took a turn around that same time, didn't it? So that explains some of Karoon's misfortune. To be fair, a lot of this is still oil going down, so that's very handy. Maybe Aussie dollar falling is helping them as well. But short-term trend is up, long-term trend is up. I just don't think it's got enough good stuff in it to call it a straight-out buy, but it's certainly very, very warm. What would make it into a buy? We need to sort out this price action, because at the moment, the price action is all over the place. So if we see a shallow pullback, some nice candles coming in here, you know the ones I like to see, the lower shadows, the white bodies, and then we sort of hook higher. Okay, I think that's going to be okay. So if we start to use this zone here, I'll draw it in for you. See that zone there? We start to use that as a bit of a trampoline zone after this last run. I think that's very positive. And the good news is that we have actually sort of had, there's been some supply sort of in and around these levels in the past. So that's sort of your second test and maybe even a third test there. So we've probably whittled away enough of the supply that's so obviously clearly must exist in this zone here, that maybe on the fourth test we might actually get through it. So look, I can definitely go a solid hold on that one, but I'm not sure if I'm a buy just right now. Now this is one we finally should have some reasonable numbers that we can use here, and hopefully get a half decent valuation on it. So we do have 8 brokers, so we're starting to get up there in the number of estimates. 1 strong buy, 4 buys, 2 holds, 1 sell. We do have earnings per share. We've had it for a little while, and well, it's interesting, isn't it? So it's a huge bump in earnings here, which then is going to flame out, no pun intended, for Karoon Energy. Look at that. Look what the brokers are saying about FY26, even FY25. So we've actually got a negative compound annual growth rate over the look forward period. The broker's price targets are a little bit higher than here. I don't think we need to change that. It's just about getting the right PE, and it's, well, okay, I mean, it's trading on 3s and 4s, but this is probably fine. So if I go target equals 12.63 and turn that off, yeah, my spreadsheet isn't loving. Let's say my spreadsheet isn't loving Karoon on a valuation basis. And not to say that mine is the only way you can value Karoon, but not loving it. So look, for oil and gas stocks, 13 is not unreasonable. I don't feel like I want to go 26.7 on this, and that's maybe what the brokers are doing. I don't feel that that's valid for that sort of growth, even though, well, I guess if you're pricing on this, but I don't think you can ignore that. I think that's where the brokers are, but I think I'm more here. Yeah. And maybe that, look, I am just one analyst. looking at it with my eyes and my experience and my biases. And clearly there are other analysts, I've just shown you, like the two PEs, clearly that both ends of the market are looking at. And I think it kind of explains this, doesn't it? It kind of explains why Karoon just kind of can't get its mojo going. Thank you, Terry. Let's get on to the next one, which is for Al, just Tyro, which, if I'm not mistaken, is under a takeover offer. So I must be, I don't know the full details of that offer and the timings and the pricing, so I'm not the best person to ask, but I can say the chart suggests to hold it from here. There's a little bit of a nasty candle coming in today, but again, I don't know without knowing, hey, oh, the bid price is $2. Oh, well, then maybe that candle doesn't matter and it's guaranteed to go through. Look, I could go hold based upon the short-term trend is clearly up at this stage. Let us go to the next one, which is Santos. Okay, well, yeah, maybe a nice little segue from Karoon to Santos. I think it's very sideways. I don't think it's as good as Karoon because I don't think the short-term trend is as well established. And I also don't think we're as close to breaking through supply. And I think supply is quite dominant here. So if we look at, you know, the impact of this top here, and then we really didn't get too close to it here. So we've kind of got to get through this and then this, whereas Karoon was kind of in here, relatively speaking. So it's a nice little segue because you have to, well, if I had to own one or the other, why would I own Santos kind of thing? I think I'm leaning towards Karoon. Now, Karoon was only 6.5 out of 10. You know, I think this one's actually fairly evenly balanced. I think it's closer to like a 5.5 out of 10. I'll just pip it over the 5, the halfway point there. Dare I look at this one here, Santos? And we'll go back here. I think I'm getting the hang of the new software, everybody, because I haven't made a mistake yet. We're going to have lots of brokers on this one. So look, 14 estimates, 4 strong buys. Oh, wow. Honestly, I did not expect that. I certainly didn't expect this looking at the chart because I tell you what, long-suffering holders of Santos, you would agree with this statement. Somebody's selling it, right? Someone's selling it. So maybe we shouldn't, you know, always put too much faith in what these brokers are saying or telling us to do. Who would have thought that the brokers who publish these publicly, who would have thought they might not have your best interests at heart? Just think about that for a sec. Anyway, maybe they want you to buy something they want to sell. Maybe. I'm just saying maybe. But wow, unanimous. That is so weird. That's just weird. Price target 21% above current. Let's, you know where I go. Like I kind of look up here, then I look there, and then I like to go to my EPS line, right? And I want to see what the growth outlook looks like, and then I probably could just skip that and just go here because the growth rate will tell me. But I like to see the shape, like the chart of it. And my brain is making a chart out of this earnings line here. Because ultimately, the stock price should be, a chart of the earnings at the end of the day. So obviously, a bit of a dip on COVID, and then powering up. Okay, well this is December 21. What am I talking about? It's because it hasn't had it's December full year, right? So I'm kind of looking in the wrong spot. I need to look here this time, and so we are falling. We are very much falling from here. Okay, so we've got a negative compound growth. If we go back to 22, and we put this to the default setting, which is usually what the brokers are using, which is about 8. Maybe 8's a bit low. I think probably target's fine. That 11.6. Yeah, I can't see what the brokers are seeing in this one. That's just weird to me. Yeah, I'm not unhappy with the valuation I've put on this. Yeah, I don't have to be spot on. I just have to get a feeling of whether Santos is cheap or expensive. And looking at that, it doesn't look cheap to me. Does it look cheap to you? Okay, next one. Let us look at ATC. ATC, yeah, it's just the chemicals company. Yeah, this came up on my scans a little while ago. And look, when you're looking at something as small and sketchy as this, look, it's always small bets. Okay, don't put the house on it and almost expect to get it wrong sometimes. I think it's okay. I don't like the fact that this bit here. See how this is kind of just lower than that? That's not a great sign. And this is important here. So we need to stay above this level. And I'll just give you what that level is. So it's this level here. And it is that low there, which is, I don't want to see it trade below 8.6, because if it trades below 8.6, I think the story's over for a while. Okay, it could be something like that. Now, having said that, if we can hold this zone and pop back up again, a little bit of a volume push would be nice to get rid of some of the supply that was created here. I think we're okay. So we're a little bit in limbo land. So, you know, this bit here is all good, right? This bit here is all good, but now we're in limbo land. We need to wait for the market to tell us which way it wants to go. And beneath 8.6, I'm quite concerned. And if we can get above this high here, which is 10.5, then it's all good again. Okay, so stuck in the middle, unfortunately, there for Yang. Now, just to read Yang's comments here. Interested in your thoughts on HSC. Apparently, they have a new technology about the battery competing with lithium battery. Oh, that sounds really interesting. What is the chart saying? Okay, I think we've looked at the chart. So that's obviously the reason for this burst in. It was kind of building before that, to be fair. But yeah, buy, hold, sell. If you've got it, I've given you exactly what to do with it, I think. If you don't have it, I don't think there's any rush to run out and buy it today. Wait for that break above 10.5. I think you've got the luxury of time if you don't have it, and let the market tell you the market likes it again. Okay, so above 10.5, I'm starting to get interested again, Yang. Perry is asking for thoughts on RGL, which is, I love the name, Rivers Gold. It's just rivers of gold with this one. I like the chart as well. I'm not sure if I love the chart, but I certainly like the chart. Just today's candle is a little bit ho-hum. But no, it's good. I think let's see how supply responds. So this is, we looked at Sheffield, so SFX, a very similar sort of pattern here where it was pretty terrible for a long time, and you got that rally. So if we look at RGL, conceptually it's the same scenario, right? So let's see how supply responds. And if you don't have it, that is, if you've got it, I think you can hold it. I don't think there's any issue with that. If you don't have it, I want to find a buy scenario because I'm interested. You know, I like these turnaround plays. I like my candles. They're high risk plays, small bets only, and it's a, you know, it's a purely specky stock, right? There's not going to be any earnings on this thing, and probably not going to be any earnings for a decade, even if they have something which they think is going to be a mine. Okay. So let's see how supply responds. If you get you know, like a really shallow little hook higher on those candles that I like to see, you know, the white one pointing down with the shadow pointing down, or the white candle in here, then I could upgrade this to a buy on the basis that, hey, holy dolly, let's see where it can go, and you know, specky buy into this potentially. You're probably going to see a little bit of supply here as well. Okay, but you probably, you know, if you can get in around here, probably work out a one-to-one reward to risk at least. So it's just a wait and see. If you don't have it, you know what I like to see before you do upgrade it to a buy. For now, I can go hold on the basis that there's more than enough happening. There's more than enough good stuff going on to see a path to holding on to this one. Let's have a look at, well, Yancoal for Marco. I'll just do it again simply because Marco's got some specific numbers in here. He's in at 623 with a stop loss under $6. What do you think about that idea? Yeah, look, I'm not sure if $6 is the level, but I gave you some numbers, didn't I? Certainly that's the level there, 590. Beneath that, I'd be quite concerned. Beneath 568, I'd be very concerned, and between beneath 528, it's lights out for this one. So maybe, if anything, I'll give you some more accurate numbers on that one, Marco. For Chernivaz, let's have a look at APA. Now, this one, again, unfortunately, took a turn for the worse. This is why you need to be on top of your trends and the price action, and not holding on to anything, not believing anything's a blue chip stock, because, you know, a lot of people told me that this was a blue chip stock as well. APA could be one that falls into that category. I think it's in real trouble, Chernivaz. I think that clearly the trends have changed. I think that's a given now. And we talked about earlier on the idea of the dynamic demand that the long-term ribbon will offer. But the problem is when it switches, when that inflection point, when it goes from demand to supply, yes, to supply, that is where you really need to watch out. And maybe even Yancoal is another one that could fall into this category. So this idea here, where that dynamic trend zone, we broke beneath it, we rallied, we tested it, and look at that candle here. This is the killer. This is the killer candle right here, isn't it? That's it, lights out all over. And there's nothing in it here to suggest to me that demand is coming in sufficiently at this level to stop it from breaking through this level. And beneath this level, there's really nothing holding it up until we get down to there. So yeah, look, I think this is, look, the buy is out of the question. We can't even discuss this as a buy. That's a zero possibility for me, because if we just label our probabilities, and I keep telling you, I think this is a really valid and valuable exercise. I reckon if that's 20%, I reckon this is probably 10% chance. And just the way this one looks to me, I think that's a 70% chance on the downside. And logic would suggest that if you had to give this a score out of 10, therefore, for going down, not for going up, but this would be a short sell score. Okay, so if you thought that this was a potential short trade, then you can head over to here and go to your Think Trader, which hopefully will log. Well, that's not my account. That's somebody else's at ThinkMarkets account, but I did have my account going. I'm annoyed it logged me out. But anyway, I'll go into Adam's account and show you how to do it. So you would literally just search for APA group, that's AU shares, and you click on trade, and you can set up your order. So don't click this one, because that's to buy it. You think this is going up. No, we think this is going down. You can either trade at market, or you could trade at limit if you wanted to try and catch a little bounce. And I'm actually thinking market is fine. So shorting this at 947, you can do a fraction of a share. You can do, if you're not sure about what short selling is, and you just want to get the hang of it, you could pick 20 stocks. And I tweeted a short list of shorts not that long ago. Just pick all of them and just do 0.1 of a share. And Nick, just chime in now. We're commission free on share CFDs, aren't we? So this would be a commission free trade. Yep. Yeah, that's right. If forgot about the long case. So if you just want to get the hang of this, you can send Nick a message after this and get his details. Open an account, and you could just get the hang of trading short by just doing 0.1 of a share on a bunch of shares and seeing how the mechanics work out for you. Hey, if you want to do a whole share, I'm not going to break the bank here, but let's say we want to do a whole share. We can also set up other like take profit. So I reckon we'd take profit around about 8.50 on this one. So let's go 8.5, and you'll say, well, we're going to make a whole $1 if it goes right. And my stop loss, I reckon you put it at maybe sort of 10 or 10. I'm going to go 10.13. It's a nice number. I've got more than 1-to-1 risk reward. I'm pretty happy with that. I'll go confirm sell, and it should do its thing. And if it all works out the way I hope it does, we'll get an open position down here very soon. Very soon. Oh, maybe sorry. If I press the place the order, there it is. There. Okay. If you press the place the order button, it will place an order. Maybe that's the message we need to learn here. So there you go. And that trade is now set up. And see how it turns out. Your worst case scenario is to lose 66 cents, but at least you're going to get that knowledge on the mechanics of short selling. Get the hang of how to do it. I digress, don't I? Let's head back to here. Let's get to the next one, which is MLX, which is looking okay. This has turned up okay. A little bit of volume. I'm not excited. If I had to give this a score out of 10, I'm going to go a solid 3.5 out of 10 on that one. That should give you an idea whether I think it's a buy, hold, or sell, Doug. There's something going on. Let's see how. Remember I said let's see how the supply side responds, and there's a bit of a response from the supply side. Let's see how the demand side responds. Look, if it hooks up, it's going to start to look interesting, but I just don't want to play that game in this market. I just think if the market is going gangbusters, you can throw a few bucks We just saw how easy it is in our CFD account, commission-free. Did I mention commission-free on ASX share CFDs? So you've got that ability to just buy a few shares if you want. You can build mega portfolios. You don't have to be all in on any single stock. You can have a look at, say, my short list of longs and just grab a few bucks on each one. Put your stop loss in, put your targets in, see how it goes, and then have a bunch of shorts going as well because you're commission free. That's the beauty of trading those CFDs. And if you wanted to flick a few bucks on this, you could in a hot market, Doug. But I just don't think it's that hot a market. I don't think it's even worth a few bucks. In this market. Let's have a look at the gold ETF for Kathy. Now, Kathy will do one better. I'm going to look at the gold price because I think, if you're going to look at the gold ETF, gold price is probably where you want to start. I've been pretty bearish on gold for quite a long time, and I don't think my view is changing based upon this chart. So I think the short-term trend is down. I know it had this monster rally through here because the US dollar came off, but I think that rally is being established. Do I think gold is going to crash? I don't think it's going to crash either, because I do think at some stage this other chart will have to come off. Surely that will have to come off, and that might give gold a little bit of a breather. Okay, but it's probably then sideways at best because interest rates are still very high. And I don't think interest rates are going to crash anytime soon. So the problem for gold is it doesn't have a yield in an environment where, you can lock your money away for just even 12 months and get 3.5%. Whereas with gold, you need to pay somebody to own it. So those gold ETFs will have sort of a fee or a burn rate in them, built into them to compensate the people who made that ETF, to compensate them for actually having to hold some gold somewhere, which is very expensive. So it's just not the right macro environment for gold, and therefore I remain pretty bearish on that one, Kathy. Hopefully that's a decent explanation for you. But the chart backs up my macro view as well, doesn't it? Let's have a look at, I've got some great questions today, really fantastic variety and spread of stocks and sectors. Craig's gone for Westpac, which, Craig, this is pretty boring, Craig. Why are you giving me Westpac? What is your intention here with Westpac? It's so sideways, isn't it? I reckon, see that supply zone? I mean, that's an issue. That's an issue, supply. And then we've got more supply in here. I don't know. And I don't think it's a short either. So there's just too much demand. In some stocks, you just have to keep moving, because here's the demand zone. Right, there's demand, the demand in there, and then there's more demand in here. So if anything, this is probably sideways at best, maybe a slight sort of, well, not slight, I think there is definitely the long-term trend is down and the short-term trend is mixed. So yeah, a negative bias, a bearish bias on Westpac, but it is certainly not one I would short today. So if we compare, say, like an APA, which I think looks really bad, and Westpac doesn't look nearly as bad as that, if that makes sense. For Ron, we've done Yancoal, so I'll keep moving. Neometals, which is starting to, I think, look in the pretty bad category, and the main reason for that is that see that long-term trend zone, see how we were above it, and it was supporting price, and look, we broke beneath it. And we've seen so many times today, haven't we, what happens when you come into this pattern. And then look at that big black candle a few days ago. And I do think supply is building on this one again. Look, there is a bit of demand here, so there's a little bit of hope if you're on it that we might hold this level. But I do feel we're going to come in and test that demand level. And therefore, for that reason, given that the probabilities are very much skewed to the downside, I'm going to go sell on this one. So buy, hold, sell, I'm going to go sell. I can't see a reason to hold it. Therefore, I would prefer to be a sell on Neometals. Great fundamentals, look, possibly, but those fundamentals are so far out. And I think that's the problem. And look, I liked Neometals on the way up, and the chart was good. The narrative was good, as the chart was good. So Kuvit has asked this one, and you have to understand, I only got 2 brokers covering this, and we're not going to have earnings until FY25, so I can't give you a valuation, Kuvit. And this is part of the problem. This is part of the problem for Neometals. No earnings until FY25 at the very earliest, and even then it's trading on 178 times earnings. So you could quite reasonably see Neometals go back to 40 cents or 30 cents and still be probably on the side of expensive. So when the market loses loses sight of that big picture, the hope and the dreams, I mean, it's all still there, those hopes and dreams and narrative, but the market's just not prepared to pay for it anymore. Okay, we're in a different market. On the way up, it's all good, The narratives are the best thing on the way up. But when you turn that corner, narratives are only going to cause you to hold on to a stock all the way back to zero. Okay, if you don't believe me, look at this one. Okay, if you don't believe me, look at this one. All right, don't get stuck with a positive narrative after the price has turned, because the price is all that matters when it comes to you making money or not. The narrative doesn't make you money. The price going up makes you money, and the price doesn't always go up in line with the narrative. When you get to the recording, I know many of you watch the recording, please rewind that bit and play it back a few times. They are the most important words that I'm going to tell you today. Please go listen to that over and over again. If you take anything out of the last bull market turning into a bear market, that's what you need to take out of this. I've seen it so many times before. Okay, query from King about drawing supply and demand zones. Yeah, absolutely. How far back in time do you generally draw them? Do you go to the last peak trough or for a certain time? So for me, it's definitely the last one is the one that matters. And it's just more like for King, the one that's going to be the most influential. So if I'm drawing it on Zip, I like to draw them pink or red and pink. So let me be able to select the damn thing first of all, and then go to here, to here, to here. So that's where my eye naturally goes. But there are other supply zones as well. For example, there and there. So I'm looking at little peaks. You're right, King. So there's one there. So peaks. And to answer your question, how far back to go? Well, I don't think there's any point, because I could certainly draw some in here. That's a major supply zone there. Look at this is why you cannot hold on to a stock too long, everyone. Stop listening to the talking heads and start to make your own decisions based upon a set of rules that you control, not them, not their views. Your view is all that matters, and your view needs to be based upon a set of rules, a set of foolproof rules, even if it's just a traffic light system like this. Right, that keeps you safe in the markets. To answer your question, King, how far back can you go? You can go as far back as you want, but try and keep it relevant, I think, is the answer to that question. Let's go ESS. This looks good. I think I've called this very boring in the past, but it's starting to look a little interesting here, haven't I? I'm pretty sure I said, it's like a solid hold, but can't get excited. I'm starting to get more excited about this one, Warren. Here's the supply. It's right there, isn't it? But we are interacting with it. The only problem is, and I might have said this last time as well, is that we've still got a bit there and a bit there. But we can see this idea, can't we, of this idea of this first test and the second test. And I'm going to put to you, Warren, if this can hook, I keep saying that phrase, John, if this can hook higher like this, right? So by hook higher, we want to see this candle. It's this candle here, or this candle here, or maybe, like that candle there is brilliant. Okay. What else? Obviously, though, these are all good. But I'm looking for a very specific one. This is a good one. And I'm not really seeing it on this stock for whatever reason. But, you know the one I like, the one with the lower shadow? If you can see that in here, it's probably a cheeky buy. But understanding... you have to put that cheeky buy within the context of, is this the best thing you could do on the market on any one day? The good news is, look, I think it's a solid hold, but it probably needs a little bit more cooking, don't you think, to make it a buy? Okay, next one is Allkem. How are we going on time? We're actually going to wrap it up very soon, so I'm going to do the next request is Silex, and then I will end there, so don't pop any more in. I think this still looks very good. Helen, and my philosophy is that if it looks good, don't mess with it. So I'm happy to go. Today's candle is very impressive. What I haven't done today, everyone, and I'm very naughty, and I'm doing it off screen now, you can't see it, is press my update button, because I get updates on the hour, so we'll get another update. But Helen, assuming that this stays with this nice big white candle here with a strong close, it's actually starting to look very good. I'm going to go, it actually got bigger. It actually got bigger. I know there's a little shadow, but it actually got bigger because I like this other white candle here. And I like the fact that we're starting to make this little inverted head and shoulders pattern. We're going to push back to the highs, which we know, and we must expect to be a bit of supply. But I think there's every reason you hang on to it because we're in a nice trend here. The candles are looking good. So I think very happy with this one. I was going to give it a score out of 10. I'm going to go, I was going to go 7.5. well, I'm going to go 8 out of 10. 8 out of 10. And by doing that, you kind of say, well, Carl's saying the probability is, it's kind of saying, I was going to do about 75 or so, but 80% there. And then, look, we might have, well, that doesn't leave a whole lot, does it? Maybe 10% there and maybe 10% back here. But it should just give you an idea of how you should be looking at every stock and every chart, and kind of thinking in terms of these probabilities. And you might get it right, you might get it wrong, but at least start to go through that process of thinking in terms of those probabilities. Allkem on the fundamentals very quickly. And then Silex, and we're done. Let us go for the brokers first. 13 brokers, so great coverage here. 2 buys, 7 buys, 4 holds, and 1 sell. EPS line 78.2 cents in the bank, and then as obviously high lithium prices ramp up and production come through, we've got monster earnings here. 34% growth rate. I would say at least moderate on that, because there is still plenty of execution risk, and there is the risk that lithium prices do pull back. You could almost be super conservative and put high in there. The right PE is very tough because we don't have a history to hold it against. I think 18 for that is probably actually pretty fair, but the brokers are sort of underpricing them. Let's go to the dynamic there, and we've got no growth rate because we need to match this up to June 22, and it's saying, so look, at a high risk rating, it's fair value, okay? At a moderate risk rating, 5% upside. At a low risk rating, it is going to be having 13.5. Well, so there you go. So it just gives you an idea of what how the brokers are kind of rating it. So what I'm doing here is I'm changing my discount rate, okay? How aggressively I discount future earnings back to a present, and beauty is in the eye of the beholder. And I'm not here to tell you which one it is, but I can certainly show you the results of changing those, okay? And maybe high is a bit harsh, okay? I think it's on the right side of cheap, and that's what we're trying to do with this spreadsheet, is say, look, is it on the right side of cheap? Is it on the wrong side of cheap? So I looked at Santos, and I felt really strongly that was on the wrong side of cheap. I look at Allkem, and I think it's on the right side of cheap. Okay, let's go back to the perfect record here on changing screens. Silex, which unfortunately I think has turned the corner. Neil saying he's still got some profit on this one. I tell you what, Neil, I think it's actually pretty simple, and I haven't had many simple charts today, to be honest, but I think beneath here, I think that's as far as you want to give it. So that low there, 259, I think beneath that, it is really confirming the short-term trend as down, and the fact that, the supply is built enough to the point where you maybe take more profits, take at least partial profits. I mean, that's something I can say with a lot of great deal of confidence, is that you would be taking at least partial profits at that point, if not maybe dusting the whole position. Silex, I don't think we're going to get any numbers in here for you, but I'll type them in to check, Neil. And we do not have earnings on that one. Okay, let me head back then to the presentation and remind people who are watching in the YouTube recording that you can join me live. Hey, get your questions answered as well. I do this every Tuesday at 1 p.m. Everybody's welcome. We have lots of fun. Hopefully you learn a bit along the way. That's the link there to get to the website and register. If you are not a client of ThinkMarkets, well, you really should be. So I showed you today, you can have your CFD account, but you can also trade shares with us as well. So proper shares, not the ones where you pay a few bucks and you get aggregated on your trades with everybody else. You are chair sponsored, you own your shares, but you can also do the CFDs as well on indices, commodities, futures, crypto, and shares, commission free on shares, I think is what we learned today. We are an award-winning broker. We haven't just been around for 5 minutes. We've been around for a very long time, and we are regulated in many jurisdictions around the world, of course, over here with our AFSL and based in Melbourne. We've just opened an office in Japan. World-class trading apps, dedicated account manager, and 24/7 customer support, and of course, my analysis from time to time. If you're watching me in the video, please hit the subscribe button to stay notified of any future video updates. We've got plenty going out each week, and hit the like button to let me know you like what I'm doing, and I'll continue to do more of it. Apart from that, it has been an absolute pleasure chatting with you today. Hopefully we can do it again soon. All the best for investing until we catch up again. Bye-bye for now.